It's a well-known adage on Wall Street, sell in May and go away. But is there any truth in this seasonal tendency for stocks to slump heading into the summer? I'm Mike Bernick from Money and Markets Extra, and joining me today to discuss this hot topic, John Markman, editor of Tech Trend Trader. Hi, John, and welcome to Money and Markets Extra.
Hey, Mike. Thanks for having me.
Well, John, we've just entered the stock market's worst six-month period from a seasonal perspective, from May through October, when stocks have historically performed poorly. Now, do you expect history may repeat again this year?
Well, you know, Mike, the folks over at Stock Traders Almanac popularized this idea of sell in May and go away strategy. And they put some hard numbers behind the what many assume to be an old wives' tale. It turns out that a $10,000 investment in the Dow Jones Industrials compounded over the past 7 decades comes to $816,984 if you invested it only from November through April, and that's over the past 7 decades. That compares with a $221 loss over the same period if you only invest from May through October. And since 1997, the Dow has climbed higher in May only 7 times, including last year and the year before.
That's quite a difference. Now, in your own service, Tech Trend Trader, you actually turned bearish on U.S. stocks last month. So what should investors expect going forward and for the rest of 2015?
Well, you know, the market has stalled, and the market has stalled over the past few months because investors expect the Fed to start raising rates either in June or September or December. And traditionally, you know, when the Fed raises rates, markets stall or actually go lower.
True.
And you know, in addition to that, you know, corporate earnings have been have not been terrible, but they've been anemic, and this is really worried investors. And you know, following the first quarter results, going into the second quarter results, this is typically the time of year when investors start to worry about, you know, what the results are going to be in the next quarter, and they start to back away from stocks. And that's really what the May through September slump is all about.
I see. So unless the economic data suddenly takes a turn for the better here, it's difficult to imagine the Fed raising interest rates anytime soon, even though that's what investors are worried about. Do you think that might that realization sinking in that the Fed's going to be on hold might help boost stocks at some point? Well,
you know, it's a double-edged sword, right? You know, if the economy weakens enough such that the Fed wants to delay raising rates, investors will be happy that the hikes will come later, but at the same time, the economy is worsening. So it's a sort of a two-way street.
Right.
And so what happens typically at this time of year is that there's a sort of a slump after the April earnings reports, sort of at the beginning of May into the middle of May, and then investors who are normally optimistic think about the possibility that maybe all the fear that was accumulated in the early part of May was overdone, and they start to get excited about the potential for better earnings when they're reported in July. So you have this interesting situation where you actually have the second best 3-month period of the year being from June through August. So really what the sell in May slump, the sell in May strategy is all about is just getting a little bit bearish, backing away from stocks in the first 2 or 3 weeks of May.
Right. So you're saying basically that investors may want to consider changing their investment posture somewhat, to maybe be somewhat less aggressive, a bit more defensive, considering the extra volatility we've seen, but there's no need to completely walk away from the stock market here over the next 6 months, is there?
Absolutely not. You certainly want to, if you have a strategy like the one we follow in Tech Trend Trader, yes, you follow the instructions to the T and you're short the QQQs right now. But that doesn't mean you back away from your entire investment strategy overall, because the period from June through August, as I said a moment ago, tends to be one of the best periods of the year for stocks.
Indeed it does. And there you have it, folks, the latest take on seasonal market trends from John Markman, editor of our Tech Trend Trader service. Thank you, John.
Thanks for having me.
And thank you, everyone, for joining us today on Money and Markets Extra. I'm Mike Bernick. Good investing.